We are the hub for news, results, and CEO interviews focusing the junior commodities sector. We provide market analysis and perspective that will help position you for solid returns.
Hey, good morning. Welcome to Stock Talk. Today, we're grateful to be able to get a chance to talk to Curt Marvis, CEO and co-founder over QYOU Media. It's been a little while. Lots of news to catch up on. There's lots of awards, lots of milestones, lots of big ticket press releases. But let's just get to the nitty-gritty one first and kind of get it out of the way. Big revenue growth, lots of improvement in quarterly earnings. Let's just give people those top-line numbers that they always want to talk about first, and then we'll dive into all the rest.
Yeah, great. Good to see you again, Andrew. Yeah, we just, the company just keeps growing. I mean, we keep having quarter after quarter after quarter of record-breaking revenue. We're a calendar year reporting company now. So in 2021, we did about $13.6 million of revenue. In 2022, we did $27.2 million of revenue. Q4 was our largest revenue quarter in the company's history. The quarter that we haven't reported as of yet, Q1 that ended March 31st, will be by far our largest Q1 of revenue in the history of the company. So we just, if you look at a chart of our business, we just keep going like this. So we keep going up and up and up that way. The challenge for us over the last really now going on 2 years is having our share price achieve the same sort of growth. We've told the market that we're going to get to cash flow break even operationally in the second half of this year. So that's a real important goal for us. So people should keep an eye on that as we enter into the July to December timeframe this year. We're looking for all of our business units to be break even and or profitable. Two of the three main business units are right now. So we've only got one more to go. Look, we're opportunistically always looking for ways to continue to grow the top line revenue the way that it has been. But we're responding to market conditions and focusing on EBITDA and profitability and making that happen.
I mean, we've talked about this before too, and I've mentioned it to subscribers, is that stock price sometimes reflects a specifics about a company. Other times it highlights the opportunity itself. And to be able to hit all these other managerial, economic, business milestones, not only during COVID and during very challenging times, to be able to hit all of those, have such great growth, I look at it as being that there's a lot of stored up value there. There's like a stored up potential. And I think everyone would agree the stock market's very challenging right now as people are trying to wait in the sidelines, that when they look to get back in, they're going to want to look to companies that have revenue, that have a market that can grow, and that has shown a model that is growing. So I see that there's a lot of optimism there still.
Yeah, I mean, I talk about this all the time, is that 2 years ago, when we had probably 1/10 of the revenue run rate, probably 1/10 of the assets in the company in terms of the channel content, the viewership numbers, the revenue numbers, the businesses were now in broadcast television, connected TV television. We have an influencer marketing agency in India. We have one here in the US. We own a gaming company now. All of that's happened over the last 2 years. But 2 years ago, our company's market cap value was 3x what it is today, 4x actually at one point. So in theory, the market was saying our company was worth 4 times what it is today, when we've added somewhere between 5 to 10x across everything, every aspect of the business.
Yeah.
So for me, that's just an indication that that's just everybody obviously talks about the market correction. It doesn't matter whether we're talking about Facebook, Amazon, and Microsoft, or Apple, or whoever, or whether we're talking about QYOU Media. And we accept that and understand that. And there's probably a strong argument to be made that 2 years ago, we were overinflated in our value. And I would probably agree with that. At the same time, I'd make the argument now that it's ridiculous in terms of the growth trajectory that we've done quarter after quarter, year after year. This isn't, as if we had one quarter that suddenly things looked bright. This has been sustained growth. It's continuing now. And we just have to believe that eventually the market will catch up in terms of valuing our business and start to get, some of that hidden asset that's not appearing to shareholders today.
And you'd mentioned a couple things here. You've got the QYOU USA and also Chtrbox and the influencer market. You've won a number of awards in this area as well, which is important, not just because winning awards is important, but it gears a lot towards specific audiences too. So you're getting a lot of traction in that sense as well with the target niche people you're trying to reach anyway.
Yep. Yeah, I mean, look, everybody likes getting awards, right? And we're in sort of the media business space, so the media business tends to be an awards frenzy. But our influencer marketing businesses, both here in the U.S. and in India, have both been racking up a significant number of awards across a broad spectrum of different agencies that are put together that do this. We just won one. Actually, it got announced yesterday for an entity called Digiday, which is a very, very prestigious advertising publication that gives awards for a lot of different things in the sort of influencer marketing and digital advertising space. And we won sort of agency of the year to work with for a campaign we did for Hyundai. So we're super proud of that stuff. We've continued to see our businesses both in India and the US in the influencer marketing space continue to grow. And that's going to continue as well. I mean, the thing that I think everybody has to realize and understand is that when we started and first got into the so-called influencer marketing creator economy business, it was still a fledgling and new idea, if you will, for advertisers or marketers. Now it doesn't matter whether you're a fast food company like a McDonald's or whether you're selling cars or whether you're trying to get people to go into movie theaters. You're going to be on Instagram. You're going to be on TikTok. You're going to be on YouTube. You're going to be on Snapchat. You're going to be on Facebook. You're going to be on all these platforms that are short form, video-based social media platforms. And we sit right in the center of all of that. So that's why, as a company that's been built to attract revenue from advertisers, we think that's why we're super well positioned. And that's why our revenue keeps going up and up and up as those businesses organically become more important around us.
I mean, that digital marketing space with influencers, I mean, that is ahead of its time because that is part of the change or this new economy we're seeing that's coming about in all this chaos that we're seeing, whether it's with AI and the content being created. There is the influencer market and those people bringing their subscribers. That's just only going to grow as we move forward. And I think when they talk about, say, with AI is going to replace a lot of jobs, what'll fill up some of those jobs is people that create content, even on a micro scale. If you have influence over 100 people or 1,000 people, there's a product for you.
Yeah.
If it's Mr. Beast with 100 million, there's a lot of products for you. But you can make a living even at the very, very niche. And I think whoever does all the legwork in a major market, say India, and puts in all the time, all the grunt work, gets the milestones, the recognition, but lays that framework, that is, like I said, to me, stored up capital that has a lot of potentiality.
Yeah, I mean, look, I think we've spoken about it, you and I, before, that in my world, you're an influencer. And so, that's part of what your definition would be of what you do is you're using social media platforms to be able to speak to potential investors. And you're someone that people that follow you that have done well on stocks or tips or other things that you've recommended or talked about on your show, they look at you're influencing their behavior, right? And that's just sort of the name of the game right now. And so these platforms, I mean, when everybody's got a cell phone in their pocket and effectively are carrying around a television screen 24 hours a day, 7 days a week, no matter where in the world they are, and all of that content that's coming out that they're watching, they're going to choose people that they're going to follow that are going to determine everything from what clothes they're wearing, through what car they're buying, through what stocks they're purchasing, and everything in between. And so our business is all based on that. And that entire industry is only going one direction. There's no one who can possibly argue with me that that's only going to keep growing and growing and growing, because kids and youth are the ones that are doing that. And in India specifically, India has the largest youth population of any country in the world. They have over 800 million people who are 30 years of age or younger. And all of those 800 million people are getting cell phones or have a cell phone or online or purchasing things in this way. And that's, ultimately what's driving the growth of our entire business, and why, when we look at where we are today, and sometimes I'll mention, okay, we think we can be a billion or multi-billion-dollar asset. That's why we still believe it, because although the market hasn't rewarded us in that way over the last 18 or 24 months, eventually it will. And we'll just keep growing the business the way we've been doing it, and let the rest of it follow eventually when it does.
And not to go without stating too, is this QYOU and Maxim Tech, you've launched Q Games Mela?
Yeah, Games Mela, which means carnival.
Carnival, yeah. Tell us about that.
Well, I mean, one of the biggest growth areas surrounding all of this, we've been talking about the advertising piece of it. Well, one of the biggest areas of engagement is gaming. And I think most people are well aware, whether it's console gaming or casual gaming on your phone, or whether it's starting to be console style gaming that you can play on your phone, which is a big thing that's happening right now. And people know games like Fortnite or PUBG or other things. I mean, this is an area of explosive growth as well. And India is poised to become the largest casual gaming user base in the entire world. It's catching up to China right now, and soon in the next couple of years, it will eclipse China. And so we saw a huge opportunity for what we were doing there with the youth audience we attract, with the advertisers and brands that we attract, to be able to get into that business of having a gaming company in-house that we could use to get onto the casual gaming platforms. So Q Games Mela is our first product. We put it out only 3 months after we completed the acquisition of Maxim Tech, so we're pretty happy about that. And Q Games Mela, which again means carnival in Hindi, is a app that you can download that has all sorts of games on it that you can win cash prizes, you can win product prizes, and it's all advertiser supported. So it's free to the end user, and brands that want to reach a young gaming audience can put their products or other things on there to advertise. So that's the beginning of our sort of move into the games business in India. But anybody who spends any time looking at what's happening with casual gaming or online gaming in the country of India or in the world as a whole will find out that that's a blue sky, white space opportunity going forward as well.
I was speaking with a hedge fund manager like 3 or 4 days ago, and we were talking about, trying to time this market. I'm not much of a timer myself, but this is his job. And, he was quite optimistic with the outlook for the market. And of course, I always ask him, well, what's the things you should be looking for? And what are some good things? And he was giving me the sense that it's not a bad idea to start putting some legwork in and looking at some companies that have opportunities to grow. And I would encourage people to take a look and see this growth trajectory you've had the last couple of years, regardless of where the stock price is at, has been very impressive. You've proven that the model works. And I think everyone would admit, with 800 million young people in India, there's a large market to work with, that it's a huge opportunity there. Even if you were just to keep on doing what you're doing, not even if you're trying to grow more organically or to build out anything else, this growth is pretty huge. And you're proving that it makes sense and is revenue positive.
Yeah, it's interesting. India, I talk to people about this all the time. India, for some reason, in the investment world, has not quite gotten the love that China got for quite a long time. So a lot of investment capital that was going into China I'm talking about from public investors, not just from private hedge funds and private equity money and venture money, et cetera, into China, which is always kind of surprising, because China is not an easy country to do business in. It's not an easy place to get money in and out of. I mean, there's all sorts of things that can make it problematic. India is much more westernized in that sense. The British were there for hundreds of years. There's a rule of law there. Contracts are in English. And the big boys, Microsoft, Google, Netflix, Amazon, these companies are pouring billions of dollars, Walmart, into India. So there are a lot of very, very, smart businesses and companies that are making huge investments in India. But we're big believers as well that what we're in the right place at the right time with respect to what's going to happen in that country. They want to become a major superpower economically and otherwise. And I think people are going to see a lot of things coming out of India over the next decade or two that will in very much sort of mimic what we've seen come out of China over the last couple of decades.
Now, summer tends to be a little bit sleepy for Canadians in the stock world. Is there anything they should be paying attention to from you guys, milestones that could be coming up, or like, listen, we're working on some things that you can't talk about, that if they're kind of keeping score, that they're like, listen, you've done what you said you're going to do for the last couple of years. What else should I be looking at in the near term to consider if they're ready to get back in?
Yeah, I mean, 100%. We're always working on things, some of which I can't talk about. So yeah. we're always opportunistic and looking for ways that we can increase shareholder value across the board. I mean, keep in mind, all of us that are in the company that have now been here for quite a few years are all shareholders. And so we're all looking to increase the share price as much as anybody in terms of what's happening. And in order to do that, there are things like institutional investment that we don't really have, which is difficult when you're a penny stock. We talked a lot a year and a half ago to a year ago about getting onto NASDAQ and doing an uplist and getting onto a senior market. All that stuff is still on the radar screen. We're always looking at all of that. We're always looking at the timings of certain things and when we should do that. I think our belief is that if we continue to grow our business and every quarter gets better and stronger in terms of what we're doing across the board with our business, we keep adding asset value in terms of what we've got across the board inside the company. Eventually, the capital markets are going to come back around and reward us for that. And there's some things that we think we can do in the capital markets to be well positioned for when that happens. And we don't play, is it going to happen in July of this year or December of this year or June of 2024? Who knows? So we don't play that game either. We keep building the business, building the value of the business, and also looking at the capital markets and trying to say, how can we position ourselves? How can we do something that can make us even more valuable when the markets do return to a healthier position?
Excellent. Well, that's the one thing that we really appreciate about the company is not only management's resume and past experience and bringing it and proving it to a new market. It's that you're hitting the numbers, hitting the revenue, the model works. And, we're not short-term, like we don't trade. So we're long-term holders of companies that we like. And you reward them if management continues to meet expectations and do what they're supposed to do, regardless of the stock price. Because like we always talk about, sometimes it reflects what the company should be. Other times it's totally a miss. And those are the opportunities that stand out. So we're thrilled to see some of the news that's come out and the awards and whatnot, because it verifies and kind of validates a lot of the hard work that you've done.
Well, thank you. We're proud of what we've accomplished, and we're going to keep digging away here and making things happen, and hopefully the benefits of that for all of us will happen here soon.
Excellent. Well, we'll be keeping an eye out as well. Congratulations again on those numbers, those revenue numbers, the EBITDA numbers. Those are fantastic. And keep hitting milestones sooner or later. Like all things, there's cycles. I think there's a lot of stored up capital waiting to come out, a lot of potentiality when that happens. I think we'll be off to the races and tearing forward again. And we look forward to that being part of the story of QYOU as well.
Awesome. Well, thanks for having me on again, Andrew. Good to see you.
Take care. We'll talk to you soon.